The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing Icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week and find out how to implement proven strategies to 10 times your business. From $3 million to $30 million in just 12 months. Brought to you by the Masters in Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate. I'm Tim Calloway. We have a very special guest for you today with TMD Capital. TMD Capital offers fix and flip, long-term rental loans, short-term vacation rental loans, new construction loans, multifamily loans, and correct me if I'm wrong, Theo, even 0% down loans. Theo, and it's Theo DeVoie, correct? I'm saying it
Yes,
correctly?
sir.
Awesome,
Yes, sir.
awesome. Welcome to the show. Glad to have you. Always love having loan partners on the show, man, because if I get any questions about real estate, you could imagine it's about loans more than anything, believe it or not. Welcome to the show.
Yes, sir.
So let's start at the beginning. Really what sets TMD apart from everyone else? I did a little due diligence. I've heard your story. What's different about you guys from everybody else?
Yeah, so we've kind of taken an entirely new approach to the lending industry. We noticed, in real estate in general, I'm sure many people can attest to it. There's just a massive gap in the service side. So we said, I was a former investor myself, bought my first investment property, went through this awful process with the banking side and said, there's got to be an easier way to get through this. So we essentially said, all right, how do we get investors access to market pricing, right? It's going to be fair pricing regardless of how you look at it. Call around, we're going to be within 25 basis points one way or another. And what we're going to do is we're going to treat your deal like it's our own. You want someone behind you, especially on the lending side, who's going to have your back, someone who's going to be in the office and make sure the deal gets done in a timely manner and what's said actually gets done. And for whatever reason, there's just a gap in that space throughout the real estate industry.
Yeah. I trust me. I've seen it, right? I see it all the time. Generally, it seems like investors like to, work with their guy or gal, on a regular basis and really don't shop around enough. And not necessarily about basis points or interest rates. They really don't shop service enough, right? Ultimately, at the end of the day, you don't know what you're missing out until you have that conversation with someone else.
Right. And I always tell people, look, I'll get you the same pricing wherever else you want to go, but who's going to be able to take your call at 10 o'clock at night? And our loan officers, every single one of them, it's a requirement. You better answer that phone within an hour or two, obviously within reasonable business hours. Don't want to kill our guys, but that's really what sets us apart at the end of the day. For sure. Deals are being made 24 hours a day now, right? Ultimately, you got to have somebody at your beck and call. Great for the investor, not always so good for the lender, though. You know what I mean? I would also say along that note, though, obviously you can see I'm on the younger side. I attest that to our youth going into this industry.
Right. That's true.
We're the young, hungry kids out there. So again, you want someone at your back at all hours of the day. The only people who are going to do that are the ones who are hungry. So that's what we look for when we're hiring too, hungry people.
Yeah, my ring light was hungry. It fell from the deal and I caught it in midair. I feel like a ninja. So tell me about the big differences. So there's something specific I want to talk about. And this isn't over the top or anything, but a lot of hard money lending or money lending overall, I'm not going to quantify it too much, has changed so much because the real estate game has changed. You guys in particular, I'll say, as I go down the list of different things that you offer loans on, I'll give you an example, Airbnb rental loans, right? That's something that wasn't even around 5 years ago, or it may have been, but I just didn't know about it. How is that different? To one of my listeners right now, we have a lot of agents, a lot of private investors listening, and they're like, man, I've never done the Airbnb, investment property. I've always done fix and flips. I'm done there, but I don't know anything about it. What are the main differences and nuances in those loans? Not that you don't have to get too detailed, but give me the bullet points.
Yeah. So the Airbnb world it's a crazy world, right? It's like you're running a business within a business. We noticed kind of over the course, particularly over the last year or so, that there was huge popularity and just not access to capital to support those Airbnb loans. So using the technology that we have today, and obviously with the expansion of your Airbnb and VRBO platforms, we kind of found a way in order to justify, all right, what's the income going to be like? Unfortunately, so we were previously using like the AirDNA data and whatnot to justify, all right, this is how much we could potentially generate on rent. Unfortunately, with the market restrictions that we've seen tightening capital markets,
Right.
it is starting to tighten up. So I hate doing it, but we're starting to have to look at, all right, what's the actual market rent as opposed
Yeah.
to what's the potential for Airbnb income? Really, the one way around that right now is if you can show 12 months rental history from an Airbnb platform, right, then it's a justifiable model. And then obviously, if you can establish experience in that range as well, then we can kind of apply that to other deals.
Okay. So I just want to make sure I'm understanding what you're saying, Theo. Because it's tightening up, it's no fault of yours or mine or anybody else's, just because that's the way things are. Generally now they're wanting, 12 months of proof, right?
Right.
Okay, gotcha. Well, it's good to know. It's good to know. So,
Yeah.
what about multifamily? That's a big, a lot of people have gone from switching from getting loans for multifamily to obviously doing syndicates. But what, give me some advantages or what you feel like it is multifamily tightening up or is everything tightening up? Talk about multifamily, because I have a large group of listeners who are in the multifamily side.
Yeah, absolutely. So on the multifamily side right now, the capital markets are also tightening. I'm saying to a lot of our investors who are coming through the door, I'm like, can we kind of focus more on the 1 to 4 family space right now? Where interest rates are and whatnot, a
Mhm.
lot more difficult to get the return on investments that investors are looking for. So I'm actually a huge proponent of the syndication route as well right now, especially with the way interest rates are on that side. If you can go out and
Yeah,
syndicate a deal, we can get better margins and my return on
nice.
investment, all that. And then you can potentially refinance out in the future, buy out those investors, all that good stuff.
Yeah, for sure. So tell me about some of the best practices. I mean, I get so many people after 276 shows. I get so many people come to me and say, Tim, what should my process be for finding money? Right? Because nobody wants to pay for money. I mean, I don't mean that to be facetious, right? I'm really being serious about it. They're like, man, I don't want to pay, high interest. I don't want to, whatever. What's Tim? Just tell me the best guy, gal to go to, or the best syndicate group, or whatever. What should they expect? What should my new investor that I send that wants to do a $2.5 million deal, right at the cusp of that top end, and what should they expect as far as process goes with you guys?
Yeah. So I'm a huge fan and I always want to make sure, right. I'm a realist. So I want to
Yeah.
make sure that one, we can get you qualified for it. So first things first, right? You come to me with a $2.5 million transaction. I want to look at the property, right? Before I even, move on sending out loan pricing, all that stuff, I'll sit with an investor and we'll go through the analytics on the market. We've got great back end technology that allows us to go in, compare comps. Ideally, you want those comps within a half mile to mile radius, but we can even look outside that range and really have a strong understanding of values. From there, I'm going to send you out exact pricing. I'll sit with you and say, hey, look, this is how much we can profit here, here, and here, depending on what we're working with, fix and flip, what's going to be our return on investment. 30-year side, what's our debt service coverage ratio? We really want to make sure those numbers are strong. At the end of the day, I don't want to do one loan with an investor. I want to take all their business. So I want to help them build from that one property to the 100 mark. And in order to do that, I got to make sure, especially on that first deal, our ROI is phenomenal. So once I get the pricing out, that's when I'm going to lay out every single document that we need from start to finish. The process, we want to make sure it's laid out as clear as possible. So that way the investor also has a full understanding of what we expect. And then we're going to lay out a clear time frame. If especially
Right.
new investors, we do require an appraisal. So reaching out to the appraisal company, making sure, all right, we're going to be able to get an appraisal back by this date. So that
Nice.
way everything's laid out. We have time frames all laid out and there's no jumps or anything throughout the process.
Gotcha. Love it. No, that's great. Now you're talking service. Now I'm hearing the service for sure. So let me flip the gears on you a little bit and talk about fix and flips, because that seems to be where everybody starts, right? When you talk about June or Joe Public on the street, and they're like, I want to get into real estate and I want to go buy rehabs, or I want to go buy foreclosures, or I want to, whatever. and and I want to flip a house down the street, which has become to me increasingly more difficult, more difficult. But tell me about how you get qualified on that. I mean, are you taking into account pre-purchase and then comps in the area, then like after repair value, things like that? What do you look for on those deals, and are they conventionally easier or more difficult to get?
So on the fix and flip side, I'm a huge proponent of starting off there. Reason being, simply one, it allows us to kind of get an understanding, right? It allows, especially as a new investor, you're able to build up some experience, understand how this entire process works. And then it also, on the other note, it allows you to go and start building up that liquidity so we can start targeting future projects, which I always lead investors. All right, let's go into the BRRRR model, multifamily model. After we complete a few fix and flips, we have that capital to work with. So love the fix and flip side. And then, especially as a new investor, I love getting them set up right where we're pre-approved, everything's in line, so that way they know exactly what leverage they can get and how much they're going to pay in fees and whatnot beforehand. And then I always say, especially new investors, consult with me before making an offer, right? I want to make sure our return on investment is going to be there. I want to make sure, yes, we're going to be able to get you approved on this. And then especially on that first one, I want to make sure our margins are strong because especially that first deal, you're going to face higher interest rates, but we want to make sure even with those higher interest rates, your return on investment's there for future success.
Yeah. So you said something right there at the end that caught my ear a little bit. Theo, as you can tell, I am not young. I am 52 years old. I have probably sons your age, but so you said in that last line, your first deal, you're probably going to pay a little more interest. It's been so long since I did my first deal, so 1992. So I don't really run into that. What does that mean? Can you explain that a little bit more? I mean, is there a situation where, hey, you've done 10 deals with us over here at TMD? We found we've gotten every deal funded, but you were paying 7.5 on the first deal. Now I can get you 4.2. Is that specifically within the industry, specifically with TMD, or is that just how the banking world works? Tell me.
Yeah. So, and there's a major difference between TMD Capital and your like a private lender, right?
Okay,
We're more hedge fund backed. I like to consider it, the
Okay.
hard money term is somewhat expiring now. It's
Right.
institutional capital at the end of the day. So
Yeah.
one of the qualifying factors specifically on that fix and flip program is borrower experience. Based on
Okay.
your experience tiers, and you can break it down, really, there's a 0 to 3 bucket, 3 to 6 bucket, 6 to 10 bucket, 10 to 30 bucket, and so on. And at each of those tiers, you're going to see higher leverage, lower interest rates, the more experience you build up. So right now, for example, and again, keep in mind, interest rates are high given where capital markets are. Starting off, you're going to start right around a 12% interest rate. And then once you get to the highest tier, you can get as low as 8.99% right now, give or take. Every day, those numbers are fluctuating. And again, our goal is to make sure, regardless of what tier you're in, you're going to get access to that base pricing, right? We don't want to kill you on one end or the other. So as you build up through those tiers, you're still going to get access to the base pricing. It kind of just depends on, all right, what tier do I fall in?
Right. Okay. Perfect. So now I'm going to talk about something that everybody wants to know about, but nobody wants to talk about. And that is interest rates, right? And that's your world. So you're the guy to come to. But as people who do this, we're so short-term minded that we always use that term, we date the rate, right? I mean, it's something that's always going to change and it's inevitable to change. Are you seeing right now hesitancy in doing deals, or are deals still blowing up? I mean, I spent the last 2 years just my head spinning in deals. But what about on the capital side? Are you seeing anything?
Yes. So, and I always look to the 10-year treasury yield, right? That's going to be your best indicator of where things are headed. In terms of interest rates, this is where TMD Capital is completely different from other banks, right? We've seen continued success and actual expansion throughout this interest rate hike period we've been going through, simply because our investors are less concerned as to where interest rates are going and more concerned with the actual investment itself. So, again, you want to walk into it very cautionary. I'm telling people, right, this might not be the right deal. Let's sit back. A better deal could come across the board. And then it's at the end of the day, it really should be an analytics game. So yeah, we might be at a 7% interest rate, but if my debt service coverage ratio is still 1.2, 1.3, 1.4 plus,
Right.
it's still going to be a good deal, right? It's still going to cash flow. And on that note, I'd also caution, be very careful with who you're working with and what products they're sticking you in. I have some people who've come to me and they're getting thrown into like 5-year prepayment penalties and whatnot at these high rates. I hate the prepayment penalties right now. I want to reduce those as low as possible, especially if we can fit it within those margins. So that way, right, investors are going to have the opportunity to cash out. And then with that being said, too, make sure we're not going into it with maximum leverage right now, too. If you have the opportunity to go into a deal, especially on the 30-year side, and hang on to some equity, that's going to give us the option to cash out, pull out your initial advance, all that good stuff when rates decline again.
Yeah, I'll tell you what, I've paid one prepayment penalty in 32 years, and I said I'd never pay it again. I made like 37% on the deal on the home, but I lost 6% of it due to that prepayment penalty. And I just remember I said I'll never ever, because I thought for sure I'd have it, I would have it more than a year, and from build to finished or whatever. Man, don't do it if you don't have to, right? If you don't have
to. But here's the thing too, unfortunately, right? Everyone wants to get their dollar, right? So people are going to sit there and say, if I expand your prepayment penalty to a 5-year period, right, I can get this loan done. But I like it, if the margins don't work, just run away from the deal.
Yeah, right. You just run. Yeah, that good advice. I'll say it, Theo. You are young, but you know your business, man. I love it. That's awesome.
I credit that strictly to the people I surround myself with. I came into the industry fairly unknowledgeable. It's through hiring people with significantly more experience and whatnot that we've been able to learn and continue to grow.
Yeah, that's fantastic. So I'm going to go ahead and get personal with you, for a minute. We've pretty much heard about, what's going on in your world, but let's talk about you. I mean, were you the 6-year-old tugging at your dad's pant leg going, hey, I want to offer, loans out on fix and flips, Paul? How do I do it?
Not, I've never been in the real estate industry.
Okay.
I grew up in a family where my parents actually run a restaurant chain. So I grew up in the business, kind of saw a business scale from start to, large expansion, and was just able to kind of sit there and learn the inner workings of business. Business is a beautiful game where regardless of how you look at it, you can kind of apply things you learn from this field to any other field. And I always had that entrepreneurial spirit.
Nice. I love it, man. Yeah, you definitely know what you're talking about. So that's awesome. So how would someone get in touch with you?
Yeah, so I highly encourage. Unfortunately, my phone blows up too much, so I'm not going to drop my personal cell phone, but you can reach us at our 800 line or go on our website, just submit a form. And like I said, that constant communication and whatnot, if you go on our website right now and submit, I'm going to guarantee you someone's going to call you within 5 to 10 minutes.
Nice. And then, by the way, that website is tmd-capital.com. Make sure you put that dash in there. Theo, as I've told you before, towards the end of the show, we kind of give the floor to, you're the hit record and I'm just the DJ spinning it, So, take us out for the next 2 minutes and tell us your thoughts. Maybe put your prognostication hat on a little bit and, tell us what you're thinking right now overall, or give us some sage advice.
Again, I go back to and I think the hottest topic right now is just this market, right? We're in a crazy market right now. So I'll just go back to what I was saying earlier. On those deals, don't jump on every single deal right now. Days on the market, and I'll go to this, right? We're seeing days on the market increase, median home values are decreasing. So keep that in account when we're looking at deals, right? Let's look at projections. All right, there could be a 5% median home value dip. This could sit on the market for 3 to 6 months. Keep that in mind, and let's just be more conservative. If we continue to be conservative, we'll weather this storm and things are going to come back down.
Very nice. Theo DeVoie, TMD Capital, thanks so much for being on the program. I look forward to catching up with you over the next 3, 6, 9 months. There's no telling what we'll have to talk about then.
Yeah, appreciate it, Thomas.
Have a good one.
You too.